What are we forecasting for housing starts this year?
We're expecting a relatively stable market in terms of construction.
What does this mean for housing demand across Canada?
We're going to see a cooling off of demand because of that uncertainty. So people will postpone purchases.
As you mentioned, we expect weaker demand and supply growth in 2026 through to 2028. What does this mean for house prices? You're listening to In-House, Canada's housing podcast, where we share the latest on Canada's housing market. Hello, everyone, and welcome back to In-House. I'm your host, Joelle Hamilton. Today, we're talking about CMHC's 2026 housing market outlook. It's our latest forecast on the economy, housing demand, home prices, rental markets, and constructions across Canada. Joining me today is Kevin Hughes, one of CMHC's Deputy Chief Economists. Welcome back to the studio, Kevin.
Thank you very much.
So I'm looking very forward to sitting down with you and hearing about what CMHC is forecasting for 2026 and beyond, so 2027 and 2028. This is my very favorite report that CMHC puts out. So that's why I'm particularly excited to have you in the studio today.
Glad to hear it.
All right, so 2026 is already shaping up to be a difficult year economically. Can you walk us through the areas of weakness and tell us how they're going to shape the economy moving forward?
Of course. So about a year ago when we were talking, I had mentioned that we didn't have a reference scenario because the economic landscape was so uncertain that we instead just put forth three scenarios: a slow, medium, and a higher growth for the economy scenarios. We see a bit more clear 12 months later, but what we do see is still quite a looming uncertainty that is definitely holding back the private sector, business investment, hiring, and it's also that cloud is also hanging over consumers in spending and, of course, in the purchases of homes as well. And it's also probably holding back household formation. So we know, for example, that we have less immigration this year, but even for Canadians who are not immigrants, those who would normally be forming households, we feel that there are probably less of those being formed because of the uncertainty. So this is really having a big impact on the economy. On the more, let's say, the brighter side, we do have a government sector, especially the federal government, that has definitely taken note of this situation and has a very, I'd say, a robust plan. So government spending will be a source of growth. So we're looking at for 2026, just below 1%, so 0.7 to be precise. So it's around 1%. It's not a recession in this baseline scenario, okay, but it is slower growth. So, it's going to be definitely here for the coming year. We should hopefully see some recovery in 27, but we do have a big milestone coming up in the summer, and that is when the three countries that have agreed on the CUSMA agreement decide if they want to continue. And I think a lot of people are waiting to see what the outcome of that is going to be.
So given this economic backdrop, Kevin, what does this mean for housing demand across Canada?
As we know, housing is demand and supply. So on the demand side, obviously, we're going to see a cooling off of demand because of that uncertainty. So people will postpone purchases. There's also the affordability that is factoring in, of course, and carrying cost. And on the supply side, you have the construction costs as well, inventories that are high. So generally speaking, we will see that definitely, and I think we can say that even in 2025 that has occurred as well. Of course, the economy, especially the external side, international trade, has an impact on housing, but in a more delayed way, if you wish. But it certainly does, and will probably continue for the near future.
So now on the supply side and construction. So construction has held up more than we may have expected. But that's definitely changing based on the HMO report that I read before having you in the studio. We also know that housing starts finished higher in 2025 with roughly 260,000 new units that were started nationally, which is the third highest annual total on record, which is up 5.6% compared to 2024. That said, the recent momentum points to a softer outlook heading into 2026. What are we forecasting for housing starts this year?
So on a national scale, we're forecasting a subdued level of housing starts. And I think, going back to you were talking about the strength in 2025, you always have to remember that housing start is a lagging indicator of business decisions that were made sometimes years before. So the strength that we saw in 2025, and indeed there was strength, it was really a reflection of that past period when interest rates were coming down, companies were putting forth their projects and starting the actual starting. So that phase, we believe, is more or less over, and we're entering a period where construction will be definitely lower. Some regions more than others. Ontario notably will be weak. In Quebec, Prairies will see some strength there because we're dealing with different types of housing. We're not dealing with mega big projects, and there's also a more affordable situation in those provinces, and demographics are helping out as well. So that's one thing. And we mentioned before inventories, and there is a lot of inventory, especially in the condo market. Notably in Toronto. So it's not surprising that, we will see this. But as is always the case, there's a regional picture that you have to take into consideration.
As you mentioned, we expect weaker demand and supply growth in 2026 through to 2028. What does this mean for house prices?
Well, this is usually, the resulting factor of these forces that come into play. So for Canada, we believe prices will be pretty stable. And then from a regional perspective, Ontario definitely will see a certain decrease in prices. And possibly BC may see a bit of increase as well due to the condo mix in the global, in the total rather. And that probably will make prices go up a little bit, but it's a compositional effect. And then Quebec and the Prairies, as I mentioned before, probably will see some price growth in 26.
Now moving on, you just mentioned like condominiums, but according to CMHC 2025 Housing Supply Report, which was released last September, purpose-built rental construction surged in 2025, and it was bolstered by government support like the Housing Accelerator Fund and a shift among developers towards the rental market. Is that still going to be the case this year?
Well, I think that rental will still be, an important part of that mix. But we saw also in last year's rental market report or rental market survey that there is easing in the rental market. So that will probably take a bit of momentum out of that market for promoters to want to build more of that. And of course, we have that on the backdrop of less immigration coming in. And as I mentioned before, there is that probably a lesser degree of household formation. So these are young people living with their families. They may not have a job, or they may have a job, but it's still, rents are still relatively expensive, and sometimes very expensive. So that will probably take some impetus out of the momentum for starts in the rental side. Condo, it depends on the market. Of course, Toronto is a particular case, so we expect that will be a depressed market going into 26, possibly 27 as well. But in other areas where they build not as big units, that will be a different case. So rental will still be, it's the more affordable market, but for many Canadians, it's still very high.
So while we're talking about the rental market, what's in store for the rental market this year?
Well, on the demand side, we've had lesser levels of immigration, and that's component of demand for rental dwelling. And as I mentioned before, quite probably lesser degree of household formation, younger potential renters, so they're not, they're staying with their families instead of moving into an apartment. So demand probably, not as strong as it was in previous periods. We have a number in many regions, a number of projects that will be part of our rental market survey again in 26. So we expect the market to still be a bit less tight than it was in previous years. And I say a bit because, when we say, 3%, a lot of people think that that's kind of a balanced market. We're hovering around that level for many areas, but in other areas of the country, it's still relatively tight. And even though rents have not increased as much, it is, especially for first-time dwellers, rental dwellers, it is still quite an unaffordable market.
So now we've talked about kind of the condo market, apartments, rental market. I'd like to shift to talk about ground-oriented homes. And by ground-oriented homes, I mean townhouses and detached homes. What are we forecasting in terms of ground-oriented homes? Are there going to be more, less, stable?
Well, ground-oriented homes, so single detached, as you mentioned, townhouses, they're quite in a minority share when you take total construction in Canada. So it is more and more the forgotten market segment, but still for many Canadians and for many regions where there's less densification and it's a bit more affordable, it is definitely a housing reality. So we're expecting a relatively stable market in terms of construction. Some areas, perhaps in the Prairies, perhaps in Quebec as well, we may see some continued growth, but it depends what area. We're not talking about necessarily the Montreal region because it's mostly all now multi-unit that is being built. So it's, I'm not going to say it's a niche market, but it is certainly not, the main market. But for many people, it is an alternative for, going into multi. If they're going from a 2-story to a bungalow, for example, that can be, a solution that many people would choose as they age. So it's not disappearing by any stretch of the imagination, but it's not going to be, a highly growing sector either.
We've talked about housing demand, new construction / supply, the rental market. Kind of what are the biggest risks to this scenario that you mentioned and kind of walked us through this year?
The biggest risk that we see, which is that milestone that I talked about earlier on, which is in July when we're going to get an indication, or probably more than an indication, we'll probably get some kind of an answer, we hope, as to the CUSMA agreement. Are we going to continue with the same environment for international trade? If that stabilizes and we continue with that agreement, I think that there'll be a lot of players in the economy will be definitely reassured, and that should be, a sign that confidence will come back. Should it not, and that's when you're talking about risks, and should that break down or should that be postponed, that's just going to delay everything even more, perhaps. And, we haven't talked about inflation, and we're not forecasting a big spike in inflation, but, should trade conditions deteriorate, it's something to look, it's not in our baseline scenario, but it's something that, we always have the back of our mind. So that agreement breaking down and that those relations breaking down further is the biggest risk. The other area of concern is we talked about government being a big player here in economic growth. The projects and that the government is embarked on are big projects, big spending projects. Those could be longer to deploy than announced. And should that drag on, money is there, but it's not being spent. That would also be, a drag to the economic growth. So those are the two, let's say, things that we're keeping our eye on.
So you mentioned that July kind of milestone. Does that mean that we'll get you back in the studio this summer to give us a housing market update?
It does. We will be doing again this year a summer update. We chose to do to do 2 forecasts a year before this environment all started. And so we're happy we made that decision, because now it's all the more relevant to do that. And we'll certainly be pleased to be back in the summer.
Okay, well, let's pencil it in before we start scheduling our vacations. So that brings a wrap and an end to our conversation today, Kevin. Thank you so much for walking us through what CMHC is forecasting in 2026 and beyond. And thank you to our listeners for joining us in-house. Did you know we're not just on YouTube? You can now find us on Spotify, Apple Podcasts, and Amazon Music. Don't miss our next episodes for more real, data-driven discussions. If you're learning from and or enjoying this podcast, please share this episode, follow us, or subscribe. Reach out. Let us know what you think. Thanks for listening, and see you next time.